if any of the shareholders fails to pay the allotment money or any of the call money, so that is known as what? Calls in arrears. Those shareholders who have not paid either allotment money or call money, so their shares we are going to cancel. So that cancellation of the rights of the shareholders for not paying either allotment money or call money is called as what? Forfeiture of shares. There are different installments where the amount of shares will be collected. So it may be on application, allotment, first call, second and final call. So like that your installment goes on. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. My dear students, today I am in the second session of Unit 2 and the unit name is Issue of Shares, and this is from the subject Financial Accounting and Reporting, and this is for second sem B.B.A students. So already we have discussed few of the concepts in your previous session. So in today's session, I am going to discuss few more theoretical concepts on issue of shares. So in your, suppose if you recall your previous session, we have learned what is the meaning of shares, what are the types of shares we have. So there are two types, equity shares and preference shares, and what is the difference between equity shares and preference shares. So there are a lot of difference between equity shares and preference shares. At the same time, we have learned few of the capital regarding your shares, where the share capital has been divided into authorized capital, issued capital, subscribed capital, called up capital, as well as paid up capital. In today's session, we shall continue with that is issue of shares. So, a public company collects amounts on its shares by offering its shares to the public in easy installments. So, how they are going to collect the amount of a particular share from the shareholders. So, I have already told you in the previous session, one who owns share is called as what? Shareholders. So, normally when the company wants to raise capital from the public, what it will do? So, it will issue shares to the public and the public will buy those shares and pay the amount to the company. So, thereby the company is going to raise the capital which is required for their day-to-day activities of the business or for its expansion of the company. So, this is how they are going to raise the capital by issue of shares. Now, how they are going to collect that amount from the public? So, in the form of easy installments, where we have first installment that is through application money, second installment allotment money, and remaining installments, it may be first call, second call, third call, first and final call, third and final call. So, this is how they are going to raise the this is how they are going to raise the amount from the public by issue of shares, that is in the form of installments. So, it may be, so there may be number of installments. So, it may be first installment, second installments, third installment, fourth installment. So, this is how they are going to raise, collect the amount from the public. Now, moving on to the next concept, shares of a company are issued either at par, premium or at discount. So, how the shares is being issued to the public? So, normally the shares are issued at par as well as premium. Now, the discount. So, normally when they are going to reissue that shares, they will be issued at discount. Okay, so let us see what is this par value, premium as well as discount. So, when the issue price is exactly equal to their nominal value, that is face value, it is called as what? Issue of shares at par. For example, so what does it mean? So, suppose the value of each share is 100 rupees and it is issued at rupees 100 only. That is the exact value. Then it is called as what? Issue of shares at par. So, what do you mean by issue of shares at par? When the issue price is exactly equal to the nominal value, then it is called as what? Issue of shares at par. And the next one is when the issue price of shares is more than the nominal value. Suppose if 100 rupees share. So, now if the 100 rupees share is issued at rupees 120, that is more than the par value, then it is called as what? Issue of shares at premium. Now, 100 rupees share is being issued at rupees 120, that is more than the face value, then it is called as what? Issue of shares at premium. When the shares are issued at price less than the face value, then the share is called as what? Issue of shares at discount. For example, if 100 rupees share is being issued at rupees 80, then it is called at what? Issue of shares at discount. That is less than the par value. So when the shares are issued at a price less than the face value or par value, then it is called as what? Issue of shares at discount. So hope you are clear about it. Now how the shares has been issued. So shares can be issued at par, premium or discount. Next is, let us see a few of the terms what is being issued under or which are being used under issue of shares. So the first one is prospectus. So what do I mean by prospectus? A prospectus is an invitation to the public to purchase its shares. It contains a complete information about the company. Now suppose, so what do I mean by prospectus? So what is an invitation? So invitation is like it contains the details where, suppose if the event has to be conducted in a particular venue. So it has to be known to the public, correct? So how they are going to do that? So they will prepare an invitation where it mentions that this is a particular date where the function will be held, at the same time and this is the venue where the function will be held, correct? In the same way, suppose if the company is going to issue shares to the public, so public should know about the information that the company is going to issue shares. So that information will be mentioned in a particular, or the details will be mentioned. So that is called as what? Prospectus. So prospectus is what? It is an invitation. So invitation telling the public about that the company is going to issue shares to the public. So a prospectus is an invitation to the public to purchase its shares. Okay, so it tells us that we are going to raise the capital by issue of shares, and it is an invitation telling the public that you have to purchase the shares of a company. Okay, so that is known as what? Prospectus. So that invitation where you are going to tell the public about the issue of shares and telling them to buy those shares is called as what? Prospectus. And the next one is calls in arrears. So when any shareholders fails to pay the amount due on allotment or in any of the calls, such amount is called as what? Calls in arrears or unpaid calls. So if any of the shareholders fails to pay the allotment money or any of the call money, so that is known as what? Calls in arrears. So the amount which is not paid on allotment or in any of the calls, so that is known as what? Calls in arrears. Next, calls in advance. So as the word itself tells, the amount received by the company from its shareholders on the calls not yet made is called as what? Calls in advance. So if the shareholders, the call is not been made, but if the shareholders have paid it in advance, then it is called as what? Calls in advance. Where the company have not called for the payment, but still the shareholders have paid either allotment money or call money in advance. So that is known as what? Calls in advance. Next, oversubscription. So what I mean by oversubscription? Normally, suppose if you take an example that there is a vacancy for a particular job. Okay, so there are only 2 vacancies. But the number of applicants who have applied for that particular job will not be exactly 2. So it will be more than 2. So that is known as what? Here the person who have applied for that particular job is more than what has been expected, what has been actually vacant, correct? So in the same way in shares, when you compare the shares, when the company receives application for more number of shares than the number of shares offered to the public for subscription, it is called as what? Over subscription. Here, for example, we need only 100 shareholders, but there are 200 shareholders who have applied for the shares. So that extra 100 shareholders are called as what? Over, or that 100 shareholders who have applied or who have subscribed, that is called as what? Over subscription. So when the company receives application for more number of shares than the number of shares offered to the public, so it is called as what? Over subscription. In the same way, under subscription. So under subscription means what? We want 100 shares, but only 80 shareholders have purchased the shares. That is known as what? Under subscription. So under subscription is a situation where the number of shares applied by the public is less than what has been actually offered to them. That is known as what? Under subscription. If it is less than what has been offered, then it is under subscription. If it is more than what has been offered, then it is called as over subscription. Hope you are clear about these terms. Next, issue of shares at par. Already we have discussed. Issue of shares at par means issue of share at a price which is exactly equal to the nominal or face value. So, for example, shares of the nominal value of rupees 10 each, which has been exactly issued at rupees 10 only, then it is called as what? Issue of shares at par. Next, issue of shares at premium. If it is more than the par value, so issue of shares at a premium means issue of share at a price which is greater than the nominal value or greater than the face value. It is called as what? Issue of shares at premium. So, shares of the nominal value of rupees 10 each are issued at rupees 12 per share. Here, rupees 2 per share is what? Premium. Next, issue of shares for consideration other than cash. Now, so here what happens? The shares will be issued. So, when the shares are issued, we have to collect cash from the public. So, instead of cash, we are going to collect any asset from the public. That is known as what? Issue of shares, that is for consideration other than cash. Other than receiving cash, we are going to take the equal amount of equal assets of that particular value. So, issue of shares by a company to the vendor from whom it has purchased the assets such as machinery, building, etc. is known as issue of shares for consideration other than cash. So, we are going to give them shares where we are going to take the asset from them. That is known as what? Issue of shares other than, that is issue of shares for consideration other than cash. Hence, no cash is received by issue of shares. So, here cash will not be received. Instead of that, any other assets will be received in spite of your cash. So, this is about your particular situation where the shares can be issued at par, premium or at a discount also. Normally, as per Companies Act 2013, so your shares cannot be issued at discount. The other situation is that issue of shares for consideration other than cash. Now, let us see an important term here, that is forfeiture of shares. So, we have already discussed about calls in arrears, where few of the shareholders fails to pay either allotment money or call money. So, that situation is called as what? Calls in arrears. Then, so suppose if the shareholder does not pay allotment money or call money, then what we are going to do with that shares? So, let us see where we are going to use the word forfeiture of shares. So, forfeiture of shares means cancellation of the rights of the shareholders on the shares held by him for the non-payment of allotment money or call money or both of the shares. So, what we are going to do, those shareholders who have not paid either allotment money or call money, so their shares we are going to cancel. So, that cancellation of the rights of the shareholders for not paying either allotment money or call money is called as what? Forfeiture of shares. You are going to use these terms while solving the problem also, and they might ask you for 2 marks. So, this is a 2 marks theory question where they will ask you what is forfeiture of shares. So, forfeiture of shares means what? Cancellation of the rights of the shareholders for not paying either allotment money or call money or both is called as what? Forfeiture of shares. So, your entry will be forfeiture shares account data to capital reserve account, where the profit on reissue of forfeited shares transfer to capital reserve. Okay, so hope you are clear about forfeiture of shares. Next, let us see the accounting treatment. So, in order to solve a problem, what are the accounting treatment we have to follow? Okay, so I have told you there are different installments where the amount of shares will be collected. So, it may be on application, allotment, first call, second and final call. So, like that your installment goes on. Okay, so let us see the first installment here, that is on application. So, for recording, what are the entries what we have to record? So, for recording share application money received, your first entry will be for application money received. Your entry is bank account data to share application account. So, this will be the journal entry. So, and in the second situation, that is on allotment. So, after receiving application money, you have to transfer the application money to share capital. So, your entry will be share application account data to share capital account. Next, on allotment, on the transfer of share application money on allotment shares to capital. So your entry is share application account data to share capital account. Next, coming to your second situation on allotment. So your entry is on allotment money due. Okay, so what is the entry? Share allotment account data to share capital account and allotment money received. So bank account data to share allotment account. Next, on calls. So here first and final call money due, next first and final call money received. So your entry, share first and final call account data to share capital account received. So what is the entry? Bank account data to share first and final call account. Next, for recording forfeiture of shares. So your entry, so what do you mean by forfeiture of shares? If any of the shareholders have not paid allotment money or any of the call money, then their shares will be forfeited. So your entry will be share capital account data to forfeited shares account to concerned first and final call account or to concerned call account where the shareholders have not paid the call money. Next, for recording the reissue of shares. So once the shares are being cancelled, they are going to reissue that shares. Normally, the reissue will happen at a discount. So your entry will be bank account data, forfeited shares account data to share capital account. Next, last entry, transfer of forfeited shares account to capital reserve. So your entry will be forfeited shares account data to capital reserve account. So these are the 9 entries what you have to remember. So under application stage, 2 entries, and under allotment stage, 2 entries, under first and final call, 2 entries. So there will be 6 entries, and your 7th entry will be on forfeiture, 8th entry will be on reissue, and the 9th entry will be on transfer of forfeiture to capital reserve. So once again we shall see. First entry for receiving of application money, bank account data to equity share application account, being application money received. Next, transfer. Equity share application account data to equity share capital account, being application money transferred. Now allotment money due. So share allotment account data to share capital account. Suppose if the allotment or if the shares are being issued at premium. So your entry will be share allotment account data to share capital account to securities premium account, being allotment money due. 4th entry, receiving of allotment money, bank account data to share allotment account, being allotment money received. 5th entry, first and final call money due. So your entry will be share first and final call account data to share capital account, being first and final call money due. Next, receive entry. So bank account data to share first and final call account, being share first and final call money received. Next, 7th entry, that is for forfeiture. So your entry will be share capital account data to forfeited shares account or share forfeiture account to share first and final call account if the amount is not received on first and final call. Narration, being number of shares forfeited for not paying first and final call money. Next, reissue, bank account data, forfeited shares account data to share capital account. Narration, being so many number of shares reissued at a discount of rupees. Suppose it is 2 each, 3 each, 5 each. So depending upon the problem. Last entry, forfeited shares account data to capital reserve, being forfeited shares account transfer to capital reserve. So these are the entries what you have to record under shares. Okay. So till it is been forfeited, reissue, and at the end transfer to capital reserve. So which has been transferred to capital reserve. So my dear students, hope you have understood today's session. See you all in my next session with a new concept. Till then, take care. Thank you.